Hello and welcome to Crypto Weeklies. In this video, we are going to discuss about Maker. None of the content is financial advice. Over the last key performance period, Maker has rallied quite a bit. You can see this is on our Crypto Weeklies website, link on the bottom of your screen in the heat map section. Maker has rallied by about 8.5% over the last 24 hours, or the last 7 days, up by about 10%. Leader of the pack. Over the last 30 days, again in the top 5 or 6 cryptos, up by about 21%. Over the last 90 days, number 2 spot at about 48%. So that this rally definitely speaks volume of what Maker has achieved. It's well above the 20-week simple moving average at around $1,300, 77 $1,377, and $1,500, which is the 21-week exponential moving average. About a $400 difference between the price and the 21-week EMA. So what does it mean for Maker per the machine learning based price forecast? If we look at this is the home page of the Crypto Weekly's website. If we look at the machine learning based price forecast, if there is a bull case in the next 6 months, the rally without any euphoria could take the price between $2,100 and about $5,800. That's the conservative price forecast in a non euphoria bull run. That is, if there is no euphoria in the next 6 months, and if there is a bull run in the next 6 months, that the price target with using seasonal ARIMA and previous market cycles as a guideline, and the machine learning techniques such as LSTM and XGBoost. The scenario in the bull case would be per the price per the machine learning model, again not financial advice, between $2,100 and $5,800. The directionality case, this pink line says all things equal, there is a likelihood that the price goes up with time than down with time. In the case there is a bear market in the next 6 months, again the bear market bottom for Maker is between $920 and $1,600. That's the likely 3 scenarios that the price could do up, go up, down, or go sideways. Again, no one can have a crystal ball which can say the market has to go up, has to behave bullish, bearish, or neutral. Again, these forecasts help identify what is a theoretical ceiling in a bull run and the floor in the bearish correction. If you are interested in tabular version of this report, is available on the bottom of your screen. The 0.68 is the 68th percentile bull case. The base case is this pink line, and the bear case is this green line. So that is a Maker in terms of machine learning based price forecast. If we were to look at the regression based fair value, the fair value is at around $2,200 for Maker. That means right now Maker did come off of a key level, which is 1 standard deviation residual applied to the fair value, and the price did hold as meaningful support essentially since March of 2025. Again, the market did correct heavily in April 2025, but Maker still put in higher lows compared to the January February bottom that Maker had at around $900. Again, we made several videos related to Maker over here. This is the homepage of the YouTube channel. You can see over a year ago, or 11 months or 3 months, that's when the market was correcting and Maker was offering a decent bottom. We did make a video. Again, if you're interested in following on this machine learning based or data science based journey and regression based journey to understand what's the relative valuation of these cryptos, please give us a like and subscribe. Again, never financial advice, but data science techniques to identify the trends behind the price action. Together, this yellow and the green band, the green line, these are the 1 standard deviation residual applied to the fair value. Together, these two, the price action stays about 70% or 68% of the time within these two bounds. If the price action were to go to that 1 standard deviation ceiling to the upside, the price could be at around $3,800. That's about 1700, slightly over $1,700 higher than the $1,900 level, at around $1,800 higher. If the top of the channel, the 2 standard deviation ceiling is reached by the price action like it did back in April of 2024, back then that ceiling was at around $3,800. Now it's at around $6,400. That could be a key area to watch for Maker as we move towards the second half of the post-halving year in 2025. That is, the last time around, Maker top in the first half of the post halving year, that is before June of end of June of 2025 2021, this time around the first half of the post halving year was quite lackluster for altcoins. So let's see if the second half has some bullish narratives in store, and follow along on that trajectory. In the DCA model says this is the regression based model, color coded with, the price is color coded with respect to risk level. Whenever per this model, whenever the prices are above, let's say 0.3 or 0.2 risk, that's when the DCA does not make that much of a sense. If you are more risk averse, whenever the risk is less than 10%, like it was throughout the course of February, most of the February to early May to late May of 2025, that risk based analysis helps identify a good bottom formation. Again, these models are live, they are not retroactively fitted. So if you check the video 3 months ago, this video, you would find that similar story in this video also. Again, if you hover through the thumbnail, you will get that in this video the regression based risk was established as less than 10%. Even the thumbnail suggests that. So you can check those videos out to verify what if I'm saying whatever I'm saying is correct, like historically speaking, at least if there is consistency in my in my analysis. You can check these videos which were conducted to verify the authenticity. So again, not financial advice. If we were to look at a range where the euphoria or the bull run kind of kicks off, that rally that risk levels between 0.4 and 0.6 help identify if a good price target can be achieved in that between that non-euphoria bull case where the risk level goes to between 0.4 and 0.6. If those were to be achieved by maker per this model, the price could be somewhere close to that 3K level and the 4K level, slightly above the 4K level, between that $2,965 to that $4,088, almost $4,100 level. So that's the intermediate bull run prediction per the regression based model. At the end, we will have a confluence of all the model to tune out individual noise. SMA model says the risk is at around 34% at this point. Again, this model also flagged less than 10% risk when we made that video 3 months ago. Again, if it were to go to that intermediate risk level between 0.5 to 0.7, the price could be between $3,300 and about $4,100 level, between that 50% and 70% risk. If the prices were to crater somewhere slightly around that 0.6 risk, the target is at around $3,800. If we were to focus slightly more on the time weighted average price model, again, that model is really helpful. Again, whenever the price is below this blue line, especially this late into the bull run, that offers a great risk reward. Again, this blue line represents the time that price has spared that key levels. That means if the underlying asset were to make a comeback, this blue line could be understood as what is the price which can be digested, because the price has been the asset has spent a lot of time above this blue line. This, you can call it as the price that the token could probably digest. It's coming in at around $1,275 at this point in time. Looking back, whenever the price is below this blue line, especially for quality assets such as Maker, especially in the depths of the bear market, you could see that historically is a key accumulation zone whenever the price is below the blue line, especially now in October 2024 as well as starting January 2025 till about early April 2025. This model helped identify where is the, and again this is helps in identifying the zero risk, wherever the risk is identified as zero, that is whenever the price is below the blue line, especially as we get close to the October territory as well as February 2025 and early April of 2025 territory. This model helps quantify the risk at any given point, especially for the bear market accumulation. So all in all, these three models are designed to do three different things. There is no overlap in their techniques. Nonetheless, together, if we were to tune out the noise between the DCA or the regression model, the time weighted average price, and the SMA model, the weighted risk is at around 21% for maker at this point in time. Again, the time weighted average price risk is not zero, because as we just saw, the prices are above the $1,275 level. Estimated bull run peak as an risk reward based expected value comes at around 8,000, slightly under $8,400 level, representing a reward of about 4.5x, slightly under 4.5x of the current price at around $1,900. With this, I would like to conclude the video. Hope you enjoyed the content. Thousands of hour worth of effort behind each of the model. So if you enjoy, please give us a like and subscribe and stay connected. Hope to see you again tomorrow, and thank you and have a nice day. Bye bye.